Hey friends, so with recent market declines, I wanted to take the time to just offer some perspective and insight as to how the markets do 1 and 2 and 3 years after a market correction. So we're going to be looking at 10% corrections or more. All right. So since 1980, there have been 34 instances where the market has declined 10% or more. So 10% being the minimum what we're looking at, but there's obviously been instances where the market's declined 20, 30, 40%, right? Okay, so we're gonna look at 1 year after a decline of 10% or more. So 1 year after that decline, the market on average has returned 24.91%. And over that time period, over that 42 years, 90% of the time you have had a positive year. Okay, so again, the average 24.91, and of all those years, 90% of the time you've actually had a positive returns 1 year after. Now, 2 years after, the average annual return is around 17%. Okay, so now we're moving 2 years removed from that decline, the average annual return is 17.5%, and over that 42-year period, 87% of the time, 87% of those years, you had a positive 2-year average return. All right, now lastly, after 3 years, the average annual return, about 12.5%. And the percentage of times of those 42 years where you had a positive 3-year average, 93%. So what's the takeaway? I just gave you a bunch of numbers, but the probability is very, very high that 1 year, 2 years, 3 years after these 10% declines or more, the probability is very high that you're going to have a positive S&P 500, a positive market experience. So I know these are difficult times. We've now, the NASDAQ's been in a bear market, the S&P 500, as I'm recording this, is in a bear market. The Dow Jones is holding up the best of the 3 major indexes, but generally speaking, it's been a really difficult time in the markets as we've anticipated slower economic growth. But again, just keep optimistic, stay positive, focus on your long-term goals as things recalibrate and we get some of this stuff sorted out. So hope this has been helpful.